Onto your markets news now. Asian markets ended today's session in the black with a number of their currencies sliding relative to the US dollar. The Japanese yen hitting a 3-month low as the Japanese ruling party lost its majority in parliament, which has reduced the expectation of further rate hikes in that country. The Nikkei share average rose by 1.82%. The Hang Seng index closed up by a mere 0.04%, while the Shanghai Composite Index closed up 0.7%. US markets ended Friday's session mostly lower, this ahead of major corporate earnings results. But the index that bucked the downward trend was the Nasdaq. This as tech companies advanced on the day. While the usual speculation around the next interest rate move will continue, the pending US elections may also create some nervous energy this week. The Dow Jones Industrial Average declined by 0.6%. The S&P 500 fell by 0.03%, while the tech-heavy Nasdaq rose by nearly 0.6%. The JSE is trading in positive territory. The all-share index is up 0.2%, hovering around 86,839 index points. The industrial 25 index is 0.3% higher, and financials up 0.4%. And the top 10 resources index up a whopping 1.4%. And the precious metals and mining index is 0.4% up. The rand is trading at 17 rand 63 to the dollar, 22.90 vis-a-vis the British pound, and 19.08 against the euro. Gold is trading at $2,731 and platinum at $1,026 per ounce. The price of Brent crude oil is just above $71 a barrel. Tumisho Greater is an investment analyst at the Ned Group Investments. Thank you very much for joining us, Tumisho. So it's basically 1 week before the US goes to the polls, and those third quarter earnings numbers are still being reported. Can we expect a volatile ride on markets this week?
Thank you so much, Nompu. Absolutely. And volatility is definitely going to be the name of the game here. As you mentioned, we've got some of the really big US tech companies that will be reporting their earnings. So we've got the likes of Microsoft and Alphabet, and they were the only ones really, or the mega tech stocks, the only ones that really backed the trend in Friday's trading session. So, and ahead of the US elections, which are due to take place just like in the next week, there's going to be a lot of speculation around, how this is likely to go, but really looking at whether or not we have a Trump administration or a Kamala administration. I think there's been some consensus on, the fact that both of their policies will be seen to be quite inflationary. In other words, that we can, possibly then expect higher interest rates. And, on another side, it'll be a lot of focus on the terms of trades will be one of those things that we will be focusing and keeping an eye out on, especially when it comes to a possible Trump administration.
Yeah. So what about on the local front, the local market, especially the rand? What are your expectations ahead of the midterm budget? I mean, it does seem that most economists are expecting that the finance minister's messaging will be very similar to that of his message in February.
Yeah, I mean, with the rand, it's going to be taking cue from what we see in terms of global developments as well. So the fact that we've got the US elections coming up will certainly be, a key impact. So, we are likely going to be seeing a stronger US dollar, which is what has been happening. So that will weigh on the rand. In terms of the medium-term budget policy statement, really not expecting any major announcements. Maybe the only other real thing is some clarity around possibly prescribed assets. The second thing is, will the Treasury be able to give us a sense of when the South African Reserve Bank, and if the South African Reserve Bank is going to be looking at lowering that inflation target? Remember, at the moment, they're looking at targeting that mid-band, which is at 4.5%, and they're looking to possibly lower it to around 3%. So that obviously will have implications in terms of interest rate moves. So we'll look out to see if that is going to be something that will come up. But I think in terms of, key expenditure items, the wage bill is always one of those factors that we look out for, and looking at the fact that there's been, some demands of double-digit increases. This is, a lot more than what was tabled in the February budget, which was still sitting at around the single digits. So, yeah, those are just some of the few items that we're looking ahead to, and obviously it does also cause a little bit of nervousness, but really not expecting anything groundbreaking at this point.
Yeah. So how are you viewing the resources sector currently? And it's quite interesting as well to see that Sibanye-Stillwater, which hasn't been doing very well at all, that share price rose by 7% on Friday's close on the back of amendments that were made to US mining regulations that set to reduce production costs for PGM miners in that country. But a little bit of Sibanye and your broad analysis of what you're seeing with resources.
That's correct. I mean, looking at last week, a lot of the questions that were coming up by market participants is that, are we now starting to see a turn? In other words, are we looking at a PGM, bull market that is coming up again? If you will remember, the likes of your palladium reaching, around the 1,100 mark, and this was really a 2024 high. To put into perspective, this is big implications for South Africa, because we are the second biggest producer of palladium, the largest producer of platinum. So, companies such as your Amplats would stand to gain from these positive moves, and of course, it'll be positive for our currency and will be positive for our fiscus. So, lots, I think, happening there in terms of the PGM space. But on the other end, if you look at things like, the oil price, apart from geopolitical factors that obviously do impact the oil price, there are other things like China being the second biggest consumer of oil, and the fact that there have been some concerns around the fact that China isn't growing as fast as what it was anticipated to grow at. The fact that we've got a slower growth coming through means that they are consuming less of the commodity, which means it is also putting pressure on that price. So, there is a bit of a dichotomy, so to speak.
Yeah. So, Timmy, how are you seeing the South African consumer, and in turn, how do you see them impacting the retail sector as we go into the new year? I think this is an interesting talk point, given that we're about to speak to the Pick n Pay CEO in a short while.
The retail space is certainly an interesting one. I mean, the backdrop is a little bit better, I think, for South Africa, given the fact that there are expectations that economic growth will be slightly better. Inflation has come down. We also are going to be getting that boost from interest rates. On top of that, we've also are having a bit of a windfall from the two-pot system, where we will likely have people paying down some of their debt, but some of it will be making its way into the retail sector. So, some of those things are certainly assisting, but looking at other factors, we are still seeing that the South African consumer is still under pressure. Last week, I think we had the FNBR Consumer Confidence Index that came out, and unfortunately, it was still showing some weakness. But I think the expectation is going forward, we are likely to see a more improved, consumer when it comes to that confidence and sentiment. So, yeah, I think it's going to be interesting to see. But again, we've got things like Singles Day coming up, what a lot of people call Black Friday, I suppose, and of course the festive season, which may also help to boost those retail sales.
Indeed. Tumisho, thank you so much for your time.